Hi, everyone. Welcome back to another episode of Unlocking Venture Capital. I'm here with Rogers Healy from Morrison Seger. How are you doing?
Awesome. How are you?
I'm good. You're calling in from Dallas, Texas today, right?
Dallas, Texas, God's country, and you're in New York City.
I
So,
am. I am. I'm so excited to have you. So we met on LinkedIn, and it was really interesting because you have such a really vast profile and portfolio of companies, and you've done a lot in the investment space. So I'm very excited to have you on the podcast and
thank
dig deeper into your background and your investment thesis, Rogers.
thank you. And I gotta say, what are you wearing today, Sydney? Is that Vera Wang? Is it Versace? Who's the inspo?
Right. It's an up and coming designer. You'll never know.
Oh wow.
Yeah.
Okay. Well, maybe that's in your portfolio. But no, thanks for including me. And everyone that's watching and listening, I'll tell you, LinkedIn is such a powerful tool. And
Yes.
I met my best friend in the world on LinkedIn, and I made some great friends like Sydney along the way. So I'm glad that it was nice enough to connect us.
Amazing. Yeah, so I noticed that, you have one of the largest and most wide breadth kind of portfolios that I have seen. And so just kind of wondering, what your thesis was, give us a little bit of background about yourself and how you kind of come up with this thesis to really be what I call a true generalist investor, unlike a lot of the other ones that are
Oh,
mostly B2B SaaS. But how did you come
yeah.
up with this thesis based on, where you've come from in your experiences?
Okay. So it's a great question. Like I've been an entrepreneur for a long time. My background is real estate. I very randomly slash serendipitously got into real estate when I was a junior in college at SMU here in Dallas, and just kind of fought the uphill battle, which I thought at the time that's part of just work, right? Is just it should be hard, it should be difficult. There shouldn't be really a lot of smooth sailing, if ever. And through that, just kind of ignorantly went for stuff, right? I think that I'm a founder, I'm an operator, I'm a connector, but I don't have an ounce of quit in me. And that led to some success, some worldly success. But over the course of time, I had opened a real estate company, I had opened a property management company, kind of everything in that space in the world of real estate. I started and I owned it, and I got complete control of it. And then over the course of time, and I promise this is not that long of a story, but just for context. I realized that my kind of secret sauce was I was a talent scout, and I would find people that were not interested in real estate. Maybe they were valet parking, maybe they were selling cars, maybe they were a bartender, maybe they were a trainer. And I'd say, hey, I think you'd be a great agent. Let me pay for you to get your license. I'll train you up. My company will give you the infrastructure to succeed. And let's do this. Let's have fun. Let's make money together. And through that, I was able to give people the gift of confidence, which is very, very rare. And the only two people that ever do it to me were my mom and my dad. I tell you this to where over the course of time, I had a lot of turnover. I had a lot of heartbreak. I had a lot of stuff that just would keep me up at night. But I had quietly been investing in, at the time, mostly consumer companies. There's a
Yeah.
company called Mizzen+Main, which is a men's apparel brand based out of Dallas. And very randomly, I was their first investor. And I did not know what I was doing. It frankly just sounded cool. It was a fun ego play. And that was my thesis, is I was friends with the founder. He still is one of my best friends. And it was fun. One thing led to another. I was very single in my 20s and my 30s. And I was, when you're single and you're making a little bit of money, the diligence is like, I like this. It seems like it's going to work. Let's go for it.
Yeah, you had
Which is
less
like
you had
kind of the
less to
story, but
lose.
yeah, or like less people to really, you know, be cognizant of.
Yeah.
And then I learned a thing called an SPV. I'm a terrible test taker. I'm a terrible student. I sit still terribly, which you're already noticing on this call. And then I found out you didn't have to go and get licensed to run an SPV.
Isn't that
Me and my
crazy?
wife right before crazy, crazy. Me and my wife right before COVID. At the time, I had probably invested in 100 companies, mostly apparel. I mean, mostly consumer.
Hmm.
And I met her. I was like, I don't think what I'm doing is what I'm supposed to really be doing forever. And so, to short answer your question, I decided to hire myself out of a job at my real estate companies. I love music, and I wanted something that was named after people that were not me, that brought it back to music. I love Bob Seger. I love Van Morrison. And so I started Morrison Seger, and we started investing in, again, mostly consumer brands, consumer and tech.
Yeah.
where the thesis is simple. It's nothing controversial. It's great founders, it's great people, and at the root of it, for the most part, every brand we're a part of, I'm a consumer, which means I can explain it, right? I drink
Yes.
fuel, I wear Mizzen+Main, and that, you know, that's it. It's just stuff that's easy because everything that I do for a living, it's all one-off, right?
Mhm.
I drink Waterloo. If we're doing a race for Waterloo, I can tell you my favorite flavor, but I think that takes a certain personality, and having a
Yeah.
real estate background has been, seemingly the perfect one.
Yeah. So were you still doing your real estate kind of like you were doing it full time while you did your very first angel check? And
Oh yeah.
how big was your angel investment into that round because you were their first investor?
Yeah, for sure. So, yeah, I mean, I was doing real estate full time up until, just a few years ago.
Hmm.
And it was $15,000, which is a lot of money, but at that phase of my life, that was a lot of money. And I didn't know about dilution. I didn't know about pref. I knew nothing. I just trusted the founder, which is still, a big part of it. Everyone's going to tell you different answers, but I think at the root of it, investing is a gut instinct. And I felt good about him. Felt great about him as a founder and a leader and just a person. And then, you know, they had their first real growth round. And my next check was six figures. And then I ended up buying out other people along the way.
Yes.
So yeah, it was, grand scheme, it was a relatively small check, but it was such a big deal to me because I was so proud to be a part of it.
Yeah.
It wasn't real estate. And everyone just assumed that all the, success and relative wealth I was building would be reinvested into real estate. And I was like, I want to have some fun. And I really like stuff.
Yes, stuff is good.
Yes.
Um, so what I want to tell our audience is how different your story is because you didn't create a fund around a specific thesis and this is my criteria and these are the metrics I'm looking for and all of these things, which is what most people do. And then
Yep.
also just most people have the emerging funds at pre-seed or seed because that's their starter fund, that's the check size that they can do. You had
Yep.
so much flexibility in what you were able to invest in because you were not stuck on a specific thesis. I don't know how your LP raising was, considering that you were not stuck on a specific thesis because it wasn't super, in terms of the accommodation for what they were
Siloed.
looking for, right? Yeah.
Yeah. Well, I'll respond to that. I think, the benefit of me really getting into venture kind of full time at 40, which I'm 45 now, is that I'd spent 4 decades building just a network.
Yeah.
And when my specialty was real estate and Sydney doesn't need a realtor,
Hmm.
that's okay. I'm not going to make money off our relationship, but I'll still remember your name and I'll remember a little bit about you. And I also love to make introductions for my friends.
Yeah.
And if you're like me, if someone goes out of their way to help you, I
Hmm.
immediately want to find a way to help them back. And
Yeah.
I had, a few decades of pent up memories. And, if Sydney likes red dresses and I find a red dress company I pursue, you're my first phone call, right? And it's scrappy. And again, it requires a different personality, but, you know, it's easy to pitch consumer, right? And especially if it's not controversial. And some people that are traditionally real estate investors, they might do a later stage Waterloo transaction. Some people that
Sure.
are
Sure.
oil and gas people, maybe they do liquid death. So yeah, it just takes a certain personality. But it's only been a few years and we're still kind of perfecting our systems.
Hmm.
But I'm just constantly meeting with people, and that I think that's unfortunately or fortunately the only way to really, really build a steady network.
Yeah. It's just like for someone who hasn't had, a fund for a tremendous, the amount of portfolio companies and investments that you guys have been involved with is incredibly impressive. So walk
Thanks.
me through how you, found the Shark Tank winner, Poppy. Is it
Okay.
before or after they were in Shark Tank? Because it's a $1 billion company now, recently acquired, right, for over $1 billion. And congratulations on that. How did you find, Liquid Death? Because they weren't particularly raising in a very traditional way either. And so, how did you get to be in on these rounds that others would have found to be nearly impossible before their fame and fandom, and be able to go along with that incredible ride?
Yeah, it's a great question. I think, look, a lot of these, like with Poppi, I was in it with my friend Denise Lambertson, who's a great founder. and then Liquid Death with my buddy Blake Wiley, who's one of the greatest investors I've ever met. But I think that, like LinkedIn, right? You and I literally meet on LinkedIn, no
Yeah.
agenda. Let's connect, let's have overlap and see. But if there's something that interests me, right, there's nothing against the rules to go. And if Sydney has a dress company or a pair, like, why not reach out? Hey, Sydney, are you ever going to raise money? And believe it or not, like that actually works. I think for some people, that's an ego blow because it's not part of their process. I'm like, that's stupid. Why not? And so we've done 3 deals. Pathwater, which is one of my favorite deals we've ever done, which I think is right up, maybe it's the second row. They weren't raising money, and I thought it was cool. Next thing you know, we raised significant capital for them. And I think that approach works, but we're also, we're really, really blessed for inbound deal flow.
Yeah.
And I
Yes.
think that's really the majority of my day is we probably get 30 or 40 pitches a day, and that's awesome. But over time, you kind of get enough reps and you know what to look for, and it makes it a little bit easier. So yeah, I've got a trusted network, but again, it goes back to the gut instinct. I know beverage pretty well. I know
Mhm.
apparel pretty well. I know food pretty well. If I would buy it, I would pursue it. If it
And
checked, yeah.
did you invest in these in the earlier stages or in their growth stages?
Poppi, I think was 2018.
Wow.
So early. Uh,
That is very early.
yeah, and it did awesome.
Yes.
Ironically, I'm not a big Poppi consumer. I do intermittent fasting, and I've been a Waterloo guy for a long time, and that's been an awesome deal too. But yeah, Poppi, Shark Tank for a lot of us has been incredible education. I
Mhm.
don't know if I was in it before or after, but the good news for that is it set the comps for beverage exits, right?
Yeah, yeah,
Mm.
that's true. I feel like you are kind of proving that there's an exception to these kinds of rules. And so what I mean about that is that I'm sure you've met thousands of generalist investors. I'm a generalist investor. But as a generalist investor, there are certain categories that are so capital heavy at the beginning that it really deters us from being able to invest in them for a variety of reasons. And one of them is that the manufacturing is really high, your starting costs are really high, it's really capital intensive
Yep.
at these really early stages. And so to be able to take the risk on some of these things has made it to be truly difficult. And at the same time, there's a part of me that's very critical about generalist investors because I'm like you're not a true generalist if you are staying away from these, many, many, many categories. So how do you find your co-investors to come in if they are, not, if they kind of adverse to this kind of risk?
You know, um, it's a great question, but again, how your memory really is your superpower, I think, when raising money, especially in a one-off syndicate type of format. And I
Mhm.
have friends that, I've got some friends that probably were like me before I went with this full time that will just kind of do everything I put in front of them, which is
Okay.
awesome.
Okay, great.
I have some friends that will only do late stage. I have some friends that will only do beverage. I have some friends that will only do water in beverage. I have some friends that will only do sparkling water. So, I think it's about just remembering that. And I think, with like these raises, these one-offs, anyone that's crazy enough to do SPVs that's watching this, you get one big check and it gives you the confidence to really go on the road show to bring
Yeah.
in as much as you can.
Yeah. Yeah.
Um, so yeah, but also like recognize Pathwater was a hard raise, but not. Everyone knew what it was. They've
Yeah.
seen it at the airport. And a lot of times someone that said I'm in for 100 will double their commitment because they're like, man, I see it everywhere. I didn't even know it. And that's great. It's later stage. It's going to be hard for it to fail. But that gets them into our programs and it gets them into how I communicate. And then maybe they invest in a deal they haven't heard of just simply based off the feeling of working with Morrison Seger.
Mm. What is the what would you say is the downside of running an SPV and what was your experience with that? What did you learn from the hardship of running the SPV?
Still doing it. I mean, we've done probably 40 SPVs in the last few years. So, well, number one, there's no revenue. There's no recurring revenue. You
Yeah,
run a fund, you get a management fee. You run an SPV, you get to cross your fingers and hope that it lands on the moon. So
that is
that's
really tough.
that's hard. And also, it is hard. Like every once in a while, a deal will come across, my desk or my email, and I'm like, man, I'd love to write a massive check right now. But I can't, I got to go through my process, which takes, every bit of a month. And then I have to find the perfect time to communicate with people, and I have to follow up with them. And, like Pathwater, I think we went from, it was great. It was awesome. Such an awesome founder, such a great story, such a great
Mhm.
product. But went from 300 people that were interested. So we sent, 250 packages with the water, the product. Then I'm following up. Did you get the package? Did you get the product? And then 50 people drop out. Then there's 200 people circling. So anyway, we end up having like 130 people invest, which is awesome, but that's expensive as well,
Yeah.
right? Every single person that joins a syndicate is a hard cost to meet.
Hmm.
So, there's definitely things that are not super simple, but on the flip side, the economics for an SPV upon an exit historically are greater than just a 20% return.
Hmm.
So if I really get behind something and feel like it's going to work,
Hmm.
the carry can be a little bit higher. And I think that's kind of worth the grunt work.
Oh, that's so great. Now, for you have such a very long history in terms of different stages that you've also invested in
Yeah.
as well as the different kinds of sectors. I always love asking the question about anti-portfolios. So when it comes to the anti-portfolios, the ones that you have passed on, which one would you say was your biggest regret and why?
Mm, I mean, I guess it's kind of a good thing that there's not one that just crawls out at me. I mean, look, I was telling my wife yesterday that the greatest thing that I could think or an investor can think is I wish I would have put more money in.
Yeah,
And,
that's a good regret.
and there's a few. There's one I'm in called Ten Can. I don't know if you have children, but it's essentially bringing back landline phones, Wi-Fi enabled landline phones. And I saw this, and I wrote a very, very small check
Mhm.
out of Morrison Seger, like my wife and me. We did not raise money for it. I wrote a small check just because I was like, this sounds cool.
Yeah.
It's up substantially just in the last 6 months alone. And so I would rather that be the case versus, I missed out on the next XYZ.
Yeah.
I've definitely missed out on stuff. I missed out on a bunch of like healthcare and beauty because I don't really know that world, and those
Mm,
multiples are
that's
insane.
fair. Yeah.
And again, that's just kind of when I was single, I was like, how am I supposed to, without being a creep, test out makeup?
Just go to a bunch of Sephoras. Don't
I
worry. They
know.
won't they won't
I
ask
know.
you.
I usually have a mustache. They probably would escort me out and send me to jail. So yeah, there's been a bunch that I've missed out on, but I can sleep at night because that's just how I can honor myself and my family and my investors is that I really won't pursue something if I don't really understand it.
Yeah, there are only very few handfuls of, there's like a handful of CPG investors in all of the US, really. I would love to understand like what are the patterns that you're seeing on the macro side when it comes to consumer behavior.
Um, I did a TV interview yesterday, and it was supposed to be. And this will tell you where I think that the interests are in the world. It was
Yeah.
supposed to be a 2-minute interview talking about inflation and food costs, and also
Yeah.
the better for you movement. Ended up being about a 15-minute interview, and it's because,
Whoa.
but I'm saying the TV people were so interested
Oh,
in everything. It's better for you, right? It's longevity, and I think people, our age, your age, my age, younger, older, it's not like this weird hippie thing to talk about being healthy anymore.
yeah.
So, obviously that's here. And, you see the poppies, the Olipops. I'm in one called Cove Soda, prebiotics, probiotics, but that's kind of a marketing play. But I think stuff that's better for you, but also not extreme, right? Like people are still drinking alcohol, right? Like I,
Yeah.
I love the taste of beer. I love my Siempre tequila. I love my body vodka, but I don't have to drink 5 times a week. So, you know, that's here. And I think that, we don't ever invest in trends like stuff that, you get that feeling you've been around long enough to know that a fidget spinner might not be, the next best thing, but it's going to have its moment, even though I have fidget spinners. So yeah, I think that's a great question, but you kind of we all can see it. Whether you go to Walmart, whether you go to Target, whether you go to a bodega in Manhattan, the stuff that sells it's going to always be caffeine. It's always going to be snack, but maybe the stuff that's selling a little bit quicker is the stuff that's technically better for you.
Yeah. Or hopefully. I always hope that that's where the trends are going, you know? And
Yeah.
it's true. Like, how do wages and everyday purchasing power match up to those things because they are more expensive to make?
Yeah, I'll tell you the randomly the focus on the show yesterday
Mm-hmm.
was about Detroit
Mm.
and how Detroit, obviously when you think of Detroit, you don't think of Beverly Hills or, you know, East Hampton. You think of a city that has just kind of fought and maybe they've gotten their butts kicked a little bit, but they were saying how in Detroit, like grocery bills are the new rent bills. Right? It's gotten so expensive. And I was doing my diligence for the interview and I found out that the cost of food is essentially up 5x in the last 5 years. Like
Whoa.
the stuff that like eggs, just like
Yeah.
essentials, eggs, bread,
Everyday things. Yeah.
flour, sugar. And, with that, from a macro perspective, 70% of Americans now prefer to eat at home, which I think there could be some goodness woven into that with people wanting to be around their families and stuff. But
Mhm.
we don't really think about that. We're blessed to be able to go and eat a meal. We're blessed to be able to go and buy deli meat. But for majority of America, that's not how it is. And so I think that stuff that's better for you, that's a realistic price, that you can actually feel and see the difference is here.
Hmm. That's really interesting.
But I still love Oreos. I talked about Oreo. I love eating Oreos.
You're like, why didn't I go back in time and invest in Oreos?
Oh, I know. I should have. I was a fat kid growing up, and I used to crush Oreos and Ritz crackers and like canned cheese, and that was a big part of childhood. But now, people care about that, and I probably would have met my wife earlier if I didn't eat Oreos and canned cheese. But here we are.
I know. What has been your best performing investment and why? I know that
Um,
you've had a few exits, Twitter, Poppi,
oh yeah, yeah.
many actually. What do you think was your best one?
Well, I think from a like, a lot of those were just like me, right? And I could put it on the Morrison Seger website, and I can disclose that some of them were frankly before Morrison Seger.
Hmm.
But we have a few right now that are pacing for, a pretty substantial outcome. Knock on wood. Like Oats Overnight is one of my favorite deals. I got it through a buddy named Sean Koffel, who has a company called Watchfire Ventures, and we got in very early. And I was like, man,
Great.
subscription
They have
oatmeal.
great marketing.
Great marketing, awesome marketing, great team. It's a former professional poker player, and he just had this crazy idea, and it's working. So I think stuff like that is great. Goat Fuel, which is like my baby, it's our energy drink that has done really well, co-founded by Jerry Rice. It's been so fun to
Oh,
watch
okay.
that kind of take over. But they're all fun. Mizzen+Main changed my life. I love Snaps Clothing, which is a men's pearl snap company that has licensing with schools like Texas A&M.
That was
Uh,
your first investment, you said, right?
no, Mizzen+Main was my first investment, but
Miss May was okay.
um, yeah, I mean, look, they all could be doing better, but they're at least all still standing, and it's fun to watch my friends that are in this that some of them like they drink two goat fuels every day, or they only wear a snap shirt, or they drink Waterloo, or when their wife is having breastfeeding, or their women are breastfeeding, they eat Miracle Milk cookies, and it's just fun to see this community being built around, frankly, just feeling
Yeah.
like a kid.
Yeah. That
You know,
is
just
very true. I feel like you've built like your own little Disneyland. Like your
uh,
AGM would be so much fun.
I thank you. Yeah, does that mean I'm Walt Disney?
You
Uh,
should. You should build an AGM like Walt Disney style.
yeah, my kid calls me a clown, so maybe it's like Walt Disney World meets the circus.
Yeah. That's so funny. It's just like out of context. You are a
Yeah.
clown.
Um, no, these
That's
are
so
listen, these are
great.
these are great questions. Way
Thank
to
you.
go.
Do you have like a growth story or a next milestone from here?
I want to continue to be happy,
Okay.
and I want to continue. I was just randomly on a call with a guy before we started. I kind of teared up, and
Hmm.
did I ask if you have kids? Do you have children?
No.
Have you remember Charlotte? Did you ever read Charlotte's Web as a kid?
Yes.
I don't remember them, but he told me on the phone. I never met this guy. He lives in Canada, and we just connected on LinkedIn, and then we talked for 20 minutes. And he goes, you need to follow the spider in Charlotte's Web. And I was like, what? And I was like on ChatGPT before we talked about this. He's
Follow the spider?
like be like the spider, and I'm I'm
Okay.
a I'm a big I'm a big Ted Lasso fan. I love Ted Lasso. But I was like trying to get on there. We're in short, the spider's goal for the pig was just to protect the pig or to protect Charlotte. Anyway, I'm butchering this, but I like that. I like making friends. I come from a very lonely industry where in a transaction for real estate,
Hmm.
one party wins, one party loses, and I hate that. Um, it's not my heart. It's not my personality. I did a relatively decent job of disrupting it in my own way, but I just want to be around people like you. Like I respect you. There's no agenda here other than helping each other out over the course of time. We'll be in a deal together. You'll make an intro, I'll make an intro, and that shouldn't be that unique. And so to be able to do that now while still helping the people that work at my real estate companies, it's kind of magic. I'll tell you what would be freaking awesome is to make some money. So anyone watching this that wants to go and buy all of our companies on the Morrison Seger website,
Yes.
you should do it.
Yes.
Uh,
It does look like a catalog, like the way that the website is. Like you can just go shop.
Go shop, but go
Yeah.
buy the companies. Don't just
Yeah.
go buy the liquid on goatfuel.com. Buy goat fuel. Um, but I know that's going to come, and I have to just stay positive and put things in perspective and just be super grateful for friends like you.
I have faith. And thank you so much, Rogers. And thank you for spending this time with me. Really
Great
love
job.
learning about your background and your thesis and more about where we're going to see you next.
Yeah, well, thank you. Great job. What can we do to support you?
Well, you guys can share this episode and would love to have more inflow and more engagement and community. So I'm excited for that. And thank you, everyone, for another episode of Unlocking Venture Capital.